Wednesday, September 15th, 2021, Monaco 64, home of alternative economics and contrarian views. So the inflation tax, the silent inflation tax, is only going to get worse. And be it the Federal Reserve or the Bank of England or the ECB, they're not there to try to protect the value or the stability of the currency that you are forced to use through legal tender laws. No, they're there to tax you even more. They're there to extract even more wealth from the general public with their policy of financial repression. And we're going to look at the UK price data today. They call it inflation, but it's not inflation. There are prices that are rising. Inflation, as I've said dozens of times, is the creation of money and credit by the central bank and the government, resulting in the rise of the general price level. So I'll go back to my 1970s Merriam-Webster dictionary, so to refresh people's memory, and also for those who haven't heard about this before, who think that rising prices actually cause inflation. No, it's the central bank and the banking system with their fiat currency, fractional reserve, lending policy, and also the government's deficit spending that create inflation. That is inflation itself. And the consequence is a dilution of the currency that you have to use. It's just more issuance of currency, and it makes the existing currency in circulation worth less, and that's reflected in rising prices. So let's quickly go through the definition that used to be correct back in the early 70s. It says an abnormal increase in the volume of money and credit resulting in a substantial and continuing rise in the general price level. So we've got that in spades. We've had it at least since '08. We've got zero rate policy from the Bank of England, zero rate policy from the Federal Reserve. We've got abnormal increase in money and credit through QE and through these zero rates, which encourage banks to keep borrowing, speculating, buying assets. And we also have the government, of course, running huge deficits. I always go back to 2010, more than 10 years now, when George Osborne became the Chancellor of the Exchequer. When the Tories came to power with the Lib Dems, he said that by 2015, we'd have a balanced budget, that we wouldn't be running deficits anymore, so that we could maybe think of paying down the debt, but there's no chance of that, of course. So here we are, 6 years, going on to 7 years later, and we're running double-digit deficits. The analogy that I like to use is about the stock market. If you own shares of BP or whatever company, and that company comes out, let's say the float of shares in the market is 1 billion shares. Let's say they come out and they say, we're going to do a rights issue of another 1 billion shares. Well, that's completely going to hammer the value of that stock in half, basically, because they're going to double the float. And that's what happens with inflation when they allow the banking system to keep creating money and credit out of thin air through zero rates, through the Bank of England is financing this. I mean, it's quite obscene that we're seeing the gilt yields, the government bond yields, less than 1%, with prices rising at almost 5%. Well, you might say, oh, CPI, or what they call inflation, came out at 3.2. Well, that CPI is a relatively new measure. Up until the mid to late 90s, we used to look at RPI, and they still publish the RPI, but they keep that in the background because that number is always higher than the CPI. I'm not going to go through the difference between the two, but suffice it to say, it's much more indicative of price rises than the CPI, which is the Consumer Price Index. RPI is the Retail Price Index. So yeah, yesterday, US CPI came out in line with expectations. The year-on-year number, it was like 5.3. The month-on-month number came out a little lower, so that was, inflation is moderating. No, prices might be moderating, but they're still rising at 5%. That's what people need to wake up and smell the flowers about. That when they talk of falling inflation, it's a scam. It's not falling. The only way that we could have prices falling is if these measures of prices were negative. So RPI today came out at 4.8%. And I think this is even higher probably. They tinker even with that number. The previous number was 3.8. The number that everyone focuses on is CPI. And the previous CPI was 2%. And it came out at 3.2 this month. Well, for the month of August. These are data published in September for the month of August. It was expected at 2.9, so it rose by 1.2% on an annualized basis. That's why they're saying it's the fastest increase. And it's a little bit misleading because a lot of people are going to see these headlines, fastest increase since Bank of England has become independent, and they're going to think that the 3.2 is the fastest increase, not the increase from the previous month, because most people just read the headlines and they're going to think, oh, that's fine, 3.2. But the other worrying thing is that on a monthly basis, the CPI number rose at a 0.7% clip. So that's worrying because if you multiply that by 12, you get 8.4%. And I would say that prices for the general public, cost of living is going to get much worse. I've been covering natural gas, how that's going to affect energy prices. It's only going to get worse. And has the Bank of England always been this bad, trying to deliberately basically steal your savings, steal your earnings through dishonest inflation? Because inflation is basically, it is theft. Yes, I called it a hidden tax, but deep down it's theft. It's misleading because you're going to read everywhere in the mainstream that such and such thing is causing inflation, higher energy prices, higher food prices, higher whatever that. No, those are the consequences of the inflation. The people who are causing the inflation, the real culprits, are at Threadneedle Street and Downing Street. They're the ones who are carrying out this policy. And it's really a great crime, I think, especially with the interest rates that they're providing savers with at almost 0%. And you've got the cost of living rising by 8, 10, probably even more. And savers can't even put their savings to earn an income at all. And even if they were earning maybe 2 or 3%, that would be in real terms negative with the way prices are rising. So how do you protect yourself against this inflation? Well, it's very difficult. Historically, of course, since the year 2000, 2001, real money, which is gold and silver, has been doing very well versus all currencies. We've had a 10% on average, almost 10% rise every year for the price of gold since 2001. This year, gold hasn't performed as well up to now. And I think that's the only thing that's keeping this scam by the central bankers and the governments going. I don't think they'll be able to keep this barometer of monetary recklessness going for much longer. And what do I mean by this barometer? Well, it's the price of gold. It's going to reflect this inflation, and it has been reflecting already. And has it always been like this? Has the Bank of England always and the government implemented a policy of deliberate extraction of wealth from the public? Not really. When this country was running an empire in the 19th century, and unfortunately nowadays there's a lot of criticism about that period. I'm not saying it was a great period, but in terms of protecting the purchasing power of people's money and currency, it was a great period. It was when pound sterling was as good as gold, when people could use silver coins, when the money was real. Yes, the Bank of England even has kept record of it. And if you look at their inflation calculator, if you had 10 pounds in 1821, when they reinstated the gold standard, up until 1914, that 10 pounds, you only needed 9 pounds 51 in 1914 to get the same purchasing power as 10 pounds in 1821. So that meant that inflation or prices dropped by minus 0.1 throughout that almost 100-year period of the gold standard. But if you look now, since 1914, which is a little more than 100 years, but look at how many pounds you need now to buy what 10 pounds could buy in 1914, 1,180. And prices have gone up on average by 4.6% a year. And that's not inflation, it's prices. The inflation has been the creation of money and credit out of thin air. That's the way they get people. They change the definition of words. Even the Bank of England does. It's deceiving. And the last period of time I want to show you is since 1997. That's the year the Bank of England that was given supposed independence. I don't think they're independent at all. And until now, or the latest figures that we have, they've been running prices at 2.7% increase every year. Their target is supposed to be 2%. By law, they have to run a 2%. So they're not even doing that properly. And it's only going to get worse. And I'm not here to tell people what to do. What I'm trying to tell people here, or try to explain to them, is what inflation really is. How you protect yourself? Let's say British Gas or Centrica or BP or any other company kept issuing new shares every 6 months, diluting the stock price, and the stock price kept falling. Would you hold on to those shares and the investment in that company? No, you wouldn't. And that's the same thing with the currency, with the pound or the dollar or the euro. Why hold a currency that's been diluted and is going to be kept being diluted? Because what you need to understand is that this fiat currency fractional reserve system is out of control. And the only way they can keep it going is by issuing and creating more and more debt, because it's a debt-based system. The flip side of the currency is more and more debt. So there's no way out, and the currency is going to become worth less and less. I'm sticking to trying to acquire as much real money, or stack real money as much as possible. And that is, of course, physical gold and silver. Yes, the prices haven't done what maybe people expect them to do through this period of rising prices, but markets and prices don't work perfectly, but in the longer term, if you just think about what a pound was back in 1914, well, a pound was a gold sovereign. I know historically it was a pound of silver, but by then, under the gold standard, a pound in terms of gold was a gold sovereign. In terms of silver, it was a lot more in terms of weight of silver. But just think that today, the sovereign is still legally a pound, but it costs you 300 fiat currency pounds to get one. So that just goes to show you how much they've inflated the fiat currency, that a pound from 1914 is much more than 300 pounds now in terms of the fiat currency, and it's only going to get worse. And unfortunately, academia, economists, bankers, business people, mainstream media, they don't think like me. And I probably wouldn't think like I do now if I hadn't. I don't know why. I looked into things and I realized that the whole academic world, economics, was a big sham. That what they're trying to do is boil you like a frog, and one day you'll be boiled to death, or your savings will be boiled to death. Have you ever wondered why wealth inequality is so huge, not only in the UK but everywhere else? Because they're extracting wealth from you, from your savings, from your earnings as well, and it's only going to get worse. And I would say don't believe anything they're telling you. The Bank of England and the government are not going to fight inflation. They're going to try to fight to inflate as much as possible without you noticing it. So with that, let's look at where the markets are this morning. It's 8:35 a.m. London time. We've got spot gold trading at 1,800. Actually, it's down $4. Range has been 17.97 to 18.05. Silver is down 10 cents, 23.75. High's been 23.89. The low's been 23.65. So just like the central banks manipulate interest rates, they're manipulating gold and silver price. They won't be able to do it forever. If they could, Zimbabwe, Weimar Germany, Venezuela, and other places would be the richest places, countries in the world, and they're not. They can't fight Mother Nature forever. People are going to wake up and realize that these pieces of paper or digital entries are worthless. And that's when the crack-up boom will start. The Dow, right now, the Dow futures up 25 points. NASDAQ is up 35, and the S&P is up 5. The FTSE is down 5 points at 70.29. To the currencies, FX update. Sterling, it's at 138.34 though. The euro is up 0.1% at 118.15. The dollar is down 0.2% versus the yen at 109.46. The dollar is down slightly versus the yuan at 643.16. Let's look at the Aussie dollar. Aussie dollar is unchanged at 73.25. The dollar is down slightly versus the Canadian dollar at 126.85. And the Kiwi dollar is unchanged right around 71. So now let's look at the general commodities, some of the general commodities, and they're also a reflection of inflation. When their prices rise, that doesn't create inflation. It's the consequence of all the inflation we've seen, especially since 2008 and 2020. So we've got WTI crude trading just below 71. It's up another percent. We've got high-grade copper up 0.5% at 433.94. We've got natural gas up another 0.5%. we're continuing to go higher. We've broken through that $5 level, which was really key resistance. We're now at $5.31. All I can say is, yes, tighten your belts and live within your means, because it's going to get a lot worse. So with that cheerful note, I wish you all a great day, and make sure also that if you haven't subscribed to this channel, that you subscribe to this channel, that you share this video far and wide. Yes, and that you make sure, if you do subscribe, that you hit that little notification bell to be notified of all my new videos. So have a great day again. Take care. Bye.